Good afternoon, fellow Cashflow builders. Welcome to another live session on Facebook with Building Cashflow Ben, Building Cashflow in the Know. And what we do here is to have a look at the charts. Have a conversation about just to get an idea what are investors' sentiments. And these conversations are what I have with myself every day as well, so that I can and it helps me to decide whether to stay in the market, stay out, get out, right? And this past 2 weeks has been very, very interesting in the movement of the market, as well as understanding how understanding the sentiments of investors, or not say understanding also, but more of just getting some insights about investors, how they feel about the market, what's their level of confidence. This is not financial advice. This is, again, just conversations that I have with myself. And because I'm having it myself, it gets a bit boring sometimes, right? So I want to make it available to all of you, and also encourage you to come forward to have these conversations outside. Because there's so much going on in the market. How do I expect myself to know everything there is to know? I'm bound to have some blind spots. So if there are some conversations that I'm not covering and you have it on your own as well, please come forward and come and share with me. The more the merrier. So without further ado, let's go. But where are we going, right? Like, the past 2 weeks has been very exciting in terms of the movement in the market. I hope you've been enjoying the rallies over the later part of each of both weeks. So is the market going to continue enjoying the love and the confidence amongst investors? So that's what we will be finding out today. So let's go. So looking at the sector summary, right? Very red day yesterday. Especially after the long weekend in the US, not in Singapore, but in the US. The US had their Memorial Day, so there was no trading yesterday. The 2 days ago. So yeah, very red day around across the sector. Only consumer discretionary had some slight change to the upside. Consumer discretionary meaning automobiles, big ticket items, luxury goods, right? S&P 500 down, small cap, mid cap, like further down compared to S&P 500. VIX went up. So I always like to begin with looking at the volatility index, because it gives me a good picture of what the initial picture of what's investors' sentiments about the market. So what we are seeing here, right, is the volatility index ever since 9th May went as high as 35 points, started to dip and even crossed below its short-term moving average. So this is something that we like to see after in the volatility index, when it has stayed above its short-term moving average. Now, the blue line, why is the blue line the short-term moving average? Is because it's the 50-day moving average, while the red line is the 200-day moving average. So, every time we see, ever since the start of 2022, every time we see the volatility index after staying above its short-term moving average, we want to see it cross below its short-term moving average. And ever since last week, it has gone above its short-term moving average. And looking at the candlestick, looking at the wick, it has gone even above 28 points. So finally settling at 26 points, right? So looking at movements like this, sometimes it may give investors, it might shake investors' confidence about the market, whether the rally will sustain or not. Now, of course, we don't just want to base our hypotheses on volatility index alone, because volatility index also gives us an indication of whether there's an increase to the volume of put options purchased in the market. So of course, when there's an increase to the volume of put options purchased in the market, it is an indicator of investors becoming less confident about the market. because they buy put options to insure against the plunges in the market. So to further whether to reinforce the hypothesis or not, what we want to do is look at the call put ratio in the market to see if while there's an increase to the put option yesterday purchase in the market, what about the volume of call options purchased in the market as well? So let's look at it. So the thing about the call put ratio is that it doesn't get updated as quickly as possible. So it's not updated yet. You might want to look at it later before you decide whether the investors' confidence in the market is waning or is still possible to remain strong. So what we saw over the past 2 weeks, or even since 20th of May, right? What we saw was a very, very steep decline in this chart. That means there's a new low. Now, a new low basically is telling me that the volume of call options has increased drastically, and possibly the volume of put options reducing drastically as well. So therefore, the ratio of in this case put to call options. So when there's less put and then more call options in the market, the ratio will start to dip downwards. So that can be something that gets investors excited and confident about the market, and confident that the other investors are confident about the market to stay invested as well, right? Because like what we saw over the past 2 weeks is what worked was investors not only just buying the security but holding on to it as well. That's why it was possible to see movements like last 2 weeks. So right, so yeah, not updated yet. So what else can we look at? Let's look at the volume of bull to bear ratio. So bull to bear ratio, volume of bull options to bull options. The volume of bullish investors to bearish investors, it's still at 0.37. So for every 3 bearish investors, there's 1 bullish investor. Yeah, it's not very it by itself, it doesn't really give investors like that confidence about investors being confident, right, that the rally will continue. And when we are in a bearish market, it's very easy to see weekly rallies. It's very common to see weekly rallies compared to a bullish market. I mean, bullish market, we saw what we saw over the past 2 years, right? Like we don't have to worry about weekly rallies. We just look at quarterly rallies, right? Like just stay invested for every quarter. So looking at some of the securities, like for example, the European security, it actually went above its short-term moving average for the European securities, and now it's fallen below again. Not way below its short-term moving average. So it should not heavily affect investors' confidence in the market. And looking at triple Q, which is US large cap and technology stocks, right? So it actually achieved a higher high over the past 2 weeks. What could give more confidence to investors is to see its price moving closer to its short-term moving average. And as you can see, the short-term moving average will continue to trend to move downwards, and even if the price of the security keeps going upwards. So what you want to see is a intersection in the future, and when that happens, or somewhere close to when investors see that like the chance of that closing up, don't even need to cross yet, like closing up, it will definitely give investors a lot of confidence to stay invested, to hold on to the security that they purchased. So while we are looking at all this, right, remember to take note of one thing, that the market today has been heavily uh, priced up because of cheap money, or cheap rates that money could be borrowed to buy stocks, and that pumped the price of securities up, right? And a lot of that money is currently being taken out of the market to pay back because of the worries, the concerns about increasing interest rate. And I mean, it's not a concern anymore. It's quite real, right? That interest rates are being increased to curb inflation. But that aside, we just want to know that that's a concern, like at the background of it. Um, so yeah, now that it's drifting slightly away from the short-term moving average, it same thing. It should not affect investors' confidence too much. So here's the thing: like if you are still invested, right? You and you're still having confidence in the market, and you're wondering if the confidence can be affected, right? By such movements, by the increase in put options in the market. What you can consider doing is to dollar cost some of your investments out um, gradually, right? Because it really is going to be helpful for you to have more cash during this period of time. Are we looking at the bottom now? Not really, because let's see, right? Like from the start of the year till date, from the start of the year till for triple Q, this is again the US large cap and technology companies, to the lowest week, right? That means the lowest price the security has gone till but didn't end the day with. It's actually almost 30% down. Can the market go even lower than that? Definitely can, right? Again, a lot of these prices, like reaching 400 for triple Q, is propped up by cheap money. So what happens when all this cheap money becomes expensive to maintain? When it becomes expensive to live in the market? So that's something to consider as well. Now, amongst all these slight deep, right, in triple Q, in energy, in Europe, what's been amazing is C triple Q, which is China's version of triple Q, large cap and technology stocks, right? Ever since Shanghai's easing, right, 2 days ago, boom, crazy jump, like crazy. Ever since the 9th of May, with its new high, right, like we're seeing a 19% jump. I mean, to be honest, I wasn't expecting this part of the movement, which is the additional 5%. What I was able to where I was able to participate was this period of time. Then I wasn't sure if the announcement by President Xi, right, that at the trade summit, that we are interested to open up our doors to the world again, because the operations here opened by foreign companies has come to a halt because of the draconian way of dealing with the COVID cases, right? So yeah, I had to exit early. Still, some copy money over there. Right now for me, it's using the dollar cost strategy, right? It's copy money here and there, copy money here, copy money there, copy money, right? So copy money. But that's just my strategy. For you, if you have another strategy, please come forward and share with me as well. Like I know that there's a lot for me to learn still. So coming down to it, right? There's nothing really to shake investors' confidence. In the meantime, just in case, please continue dollar cost averaging and please continue to raise cash, right? So, yeah. So, thank you all very much for joining me on today's live session. And, I have enjoyed looking at the market over the past 2 weeks, and I believe I'm gonna continue enjoying watching how the market develops over the coming few days as well. And yeah, you know, please continue to raise cash. Please keep an open mind to using dollar cost average to invest. And once again, thank you all so much for joining me on this live session. And I'll see you in the next one. Stay safe, stay invested. I'll see you. Take care. Bye bye.